Welcome to the Jay Martin Show. If you're new to the show, my name is Jay. I'm an investor. I'm just looking for the smartest home for my cash. If that sounds like you, then I think you're going to like what we do here. My guest today is Shawn Khunkhun. Now, it's Shawn's first time on my show, although he's been in the precious metals market for over 20 years and been directly involved in over $1 billion of capital raised for junior mining companies. Now, Shawn's been discussing some parallels that he saw in the 2004 to 2007 precious metals market. And obviously we know what happened after that was a crazy bull market from 2008 towards 2011. I wanted to see if we could pull some parallels to what we've seen from 2020 until today. Turns out there's quite a few. Today, Shawn is the head of Dolly Varden Silver, a publicly traded silver company with a very impressive list of shareholders. We talk about that as well. Here is Shawn Khunkhun. Enjoy.
This is Jay Martin.
All right, here I am with a first-time guest, Shawn Khunkhun. Shawn, it's great to have you on the program. Looking forward to chatting with you.
Hey, thanks for having me on.
Let's start with some silver sentiment. You've been in the game a long time. You've seen a lot of markets come and go. I have a lot of subscribers right now asking me why the macro setup for precious metals looks so good, yet the metals and specifically the equities aren't performing too hot right now. So based on what you've seen through your career, what do you make of today's market? Let's start there.
Yeah, that's a really good question. I have been around metals and metal equities for 20 years, so I have seen a few cycles. I've also studied it. I've spent every waking minute obsessing, a healthy obsession, I say. But I guess my experience has been in the past, and I'll reference 2005 because I lived it. I could talk about 1979. I wasn't even born. I was born in 81. So let me talk to you about a period that I actually lived and went through and witnessed. So I'm going to take you back to the fall of 2005.
Okay.
And in the fall of 2005, there was an argument out there, and there was two talking heads on national Canadian business television, which were John Emery and Brian Acker. And Emery was a gold bull and Acker was a gold bear. And the question or the idea was from Acker was, my grandchildren's children will never see $500 gold. Gold was sub 500. So my grandchildren's children will never see $500 gold. And, I would say if you took a poll in 2005, 90% of people that worked in financial markets would agree with Acker. Gold had spent, 2 decades at around $300 an ounce. And this idea that it was going to go through 500 sounded absurd. And then what happened was in early 2006, so call it Q1 of 06, guess what? Gold broke $500. And it was incredible. Now, there was a huge letdown by precious metals equity investors, particularly gold investors, because the gold equities didn't react. So you actually had this event that we never actually even believed was going to happen. But our proxies, our best thinking that brought us to gold, they weren't working. And there was this huge letdown and disappointment. And then fast forward to April 2006, so a couple months later. Now gold rips because when you take out a top, you don't go to 501 or 502 or 520. Gold went to 730. And on that move, if you go back and study the charts, and you look at, I want to say it was the first week of May 2006, stocks were going parabolic. It was most incredible. And I was, here I am. I just started in the business in March of 2004. So I was 2 years in, and I've got companies that I own that are going from 50 cents to 250, from 7 cents to 40 cents. I'm seeing this wealth creation in front of my eyes and the excitement. And this is happening in trading days, in minutes, in hours. And unfortunately, because I think we got to give the full story, if you then fast forward a month later to June of 06, there was massive pullbacks. Those same stocks that went from 50 cents to 250 were back at 90 cents. Now, they're still almost twice the price they were, but there was a big pullback. Gold pulled back, the equities pulled back. But if if I were to look at any time, and you know what, like, look, there's no time in history that's identical. But if I were to say what I think we're coming into for the spring of 2004, I think it's a similar setup. It wouldn't surprise me that if in US dollar terms, we saw some new nominal highs in gold in early Q1 or in late Q1, early Q2. And I wouldn't be surprised if there was a bit of a lag in some of these equities. But having said that, I also think if you look back at the TSX Venture Exchange, which is home to so many of these junior golds, the index was 3,000 points. It was valued at 3,000 points in the spring of '06. Whereas like right now, where is it, like 600 points or 500 points? It's anyway. So that's I get it. We look at what silver is dropping on some days by $1 an ounce in a given day in the last week or so, and I understand the frustration because you look out at something like U.S. debt, and you've got trillions of dollars. Like I was looking at 3 years out, just the interest on the debt is going to be $3 trillion. And then we look at some of these vehicles, like some of these equities that should be pricing in that print, that inflation, and they're not reacting. I would just say you've got to be patient. It doesn't go lock, step, and barrel. Like there's sometimes a lag effect, but you just have to be there.
Yeah, okay. I like those parallels. An amazing date recall, by the way. I mean, you're going through April 2006, May 2006, June 2006. And so if I were to pull that into today's market, you could see a similar setup if you think back to 2020. The metals took off, right? I mean, the sky was falling, everything was very uncertain. There was initially a liquidity crisis. People sold everything that wasn't bolted to the floor to get US dollars, but then a lot of cash started flowing into precious metals and the equities ripped. In 2020, a lot of money was made in the precious metal sector. 2021 as well. Unfortunately, a lot of that money was given back to the market, right? As happens, and kind of you discussed 2004 to 2006, but fast forward 2008 to 2011, a parabolic market, and silver ran from like $10 to $50 thereabouts, right? And so would you speculate that maybe we have a similar setup today, that similar slingshot architecture in the marketplace today?
Yeah.
And I'm not asking you to predict the next 2 years of the market, Shawn, but like based on what you've seen.
So if I go back, and again, like, if I look at gold, for instance, gold was in a range from, call it 2013 to 2019, let's call it an $1,100 to $1,300 range. And that was after that big move that you talked about that ended in August of 2011, the move to 1900. So anyways, gold is range bound. Actually, it's not, because it was only range bound in US dollars. And right. So in every other currency, and I think we should actually look at what gold is doing in other currencies to tell us, because if you go back and study that period from 2013 to 2019, in that consolidation, as gold was breaking out in yen and won and real and all these other currencies, and dollar gold maintained itself in a range. But when it finally broke out of that range, and it finally broke above 1350, went through 1400, where did it go? It went to 2000. Now that move took 13 months. And why I'm so focused on silver today and not gold, like in my first 10 years in this business, I focused on gold. But what I learned was silver reacts so quickly and violently and outperforms. So let's take the 2013 to 2019 period. What took gold 13 months, silver performed in 6 weeks in the summer of 2020, right? It went, it made a 50% move from 20 to 30 in a matter of weeks. It bottomed at 1194 in the spring of 2020, and it went to a high of $30, right? Silver just, it violently outperforms gold. Gold always leads. I love the setup right now, Jay, because even in US dollars, like take the last week of trading out of the picture here, gold was pretty close to all-time highs, even in US dollar terms, right? And I don't think it's going to take much for it to break. Now, a lot of people that study silver would say we are so far off the highs, the $50 high in 1980 or the $49 high in April of 2011. We're so far away. But if you remove those two anomalies, Silver too is close to all-time highs. And I'm not going to take credit for pointing that out. It was actually my buddy Chris Marcus at Arcadia Economics that was like, Shawn, take out those two highs. And now that I'm looking at this setup going, okay, gold is not on a percentage basis, not too far away from its USD highs. So it takes that out, and so is silver. And what's cool, going back to '06, when you have, and again, I'm looking at this market right now. I was actually spent some time with Peter Brown last Monday, a legend, right? And for, I'll let you talk, you could maybe school everybody on who he is and what he means to our business. But before you do that, I just want to say, he said to me, he goes, we're not in a bear market. And I paused for a second, and I thought that was interesting. He goes, we just basically don't have buyers. If you think about it, we don't see all this selling pressure. We don't see this capitulation low in mining stocks. It's just, there's a vacuum of buyers, right? And so if we look at all these factors, when the buyers come in, and they'll come in when the prices move, there's no selling pressure. Where's the ask going to be on these share prices? And that's where you can get these parabolic moves to unquestionable share prices. It won't be sustainable, but it'll be hockey stick charts.
It'll be hot. Yeah, that's interesting. That's a very interesting perspective, and you're right. There is a lack of risk capital right now. And what attracts risk capital back is a few rising prices. I mean, investors will chase rising share prices aggressively. That's what drives a lot of markets. And for context, Peter Brown is the founder of Canada's largest independent bank, and arguably made more money in this business than maybe any other investors in the country. He's up there. That's for certain. His collection of Bentleys would be a testament to that. All right, so when I'm looking at this market, my next step, Shawn, is obviously I'm looking for torque, right? I do buy physical metal. But I'm in the equities because I want that torque. I want that explosive upside. And you get that by looking at the early stage equities market. So as simply as you can, walk my audience through that opportunity with Dolly Varden Silver. And maybe I'll just segue over to that with a quote from a mutual friend of ours and favorite on my channel, Bob Moriarty, who published a piece this morning titled Dolly Varden is Still Silver. So walk me through the Dolly Varden story, Shawn.
So can I, before I talk specifically about Dolly, can I just give you a little bit about like why silver?
Yeah, let's do it.
Is that all right? And again, and just further to your point, like there's about buyers and money coming into the space, like there's more money than there ever has been. So like this move that we're going to see is going to be the biggest move we ever see. And I really think that of all bubbles, right? I really think that gold and silver are the most universal concepts that are out there, and it'll be the biggest and greatest bubble of all. And now that we've got the advent of a lot of millennials that, because of 2020, that during that COVID period where you had, whether post that, like the GameStop phenomenons or the Robinhood things, we are now going to have a whole segment of investors that come into the space. Not blaming Bitcoin, it's actually a benefit because of Bitcoin. And so I just think this coming move is going to be so incredible. Now, specifically silver. Look, we're setting up for a situation in coming years where half of all silver that is currently being produced will be consumed by one industrial aspect, which is solar panels. Like half the silver that we are producing, which is like 1.2 billion ounces a year, we're going to a world where 500 million ounces will be consumed for solar, right? And like the trend, like solar used to consume 4% of the silver market. If you go back to 2014, we're now up to like 15, 16%. So we've already seen a 300% increase, and that's just solar. And then if you look at it, if you really study silver, 20% of silver that's being produced is coming out of pure silver mines. So if you need silver, but it's 80% of it is coming as a copper byproduct or base metal byproduct, how do you ramp up that production if it's just a byproduct? And then if you study the copper market and you see, the setup there and the fact that some of these big projects are going to take longer to come online or aren't going to come online, where are we going to get the silver? So the setup for silver is the most insane setup we've ever had, because you've got 70% of the silver that gets consumed is consumed for industry. The only 30% are guys like me. Like, I was just at the silver symposium this weekend. I came back, it was just a token amount, but I came back with another 175 ounces of silver. Every time I go to one of these shows, I take whatever little bit of disposable income I have, and when I'm not speculating on Torquay mining stocks, I'm stacking silver and gold. But so I think, based on my experience, like, I spent 6.5 years building a gold mining company in the 2000s. It took everything out of me, and it took all the luck of, catching the right gold wave, the gold price going from 300 to 1900. It took getting lucky on discoveries. It took one of the best mining finance markets in the last 100 years. And I had success. All the stars lined up and I had success. Jay, I made more money passively investing in silver stocks in 6 months than I did in that Cinderella gold mining story. So for me, it was like, Shawn, find yourself a silver opportunity, a pure silver opportunity, a high-grade silver opportunity, and really try to find it outside of Mexico. Why? It's not that Mexico's bad. It's that I remember conversations back in 2011 when silver did go to $49, and chief investment officers, I remember hearing them say, because when money comes into the space, you've seen it in uranium, you've seen it in other metals. When money comes into the space and fund managers go to allocate, I remember hearing guys say, we have too much country risk. We have, all these silver opportunities are in Mexico, and it's not Mexico's bad. It's just, we need diversification. So I really tried to find something that wasn't in Chile, not in Argentina, not in Mexico, not in Peru. And at Dolly Varden, I got really lucky, Jay, that Mexico's making it tougher to mine, that Chile is threatening to nationalize some of their mines, that Peru, you've got some community opposition and leftist government sweeping, and then Argentina is just an absolute mess right now in terms of the currency crisis. So what Dolly is what Dolly was before I took it over, was an old, and these are the words that Rick Rule used, right? Before he became a shareholder. It's an interesting old historic mine that works in a rising silver price environment. How we've changed the company, what we've built it today, we did 3 things. We raised a meaningful amount of capital. We raised about $65 million with really good investors. So we brought in Hecla Mining, Eric Sprott, 50% of the company is institutionally held. So we raised the right capital with people that bought into a vision that are allowing us to build a business. We raised money. We made a significant discovery. So we found silver underneath the sedimentary cap. So a lot of my career, I've watched, whether it was in the Timmins camp or in the Red Lake camp, when you have a new way it's usually finding mineralization in a new host rock. In our case, it wasn't that. It was the same host rock, but we just didn't know that host rock persisted below a sedimentary cap. So it's a scientific breakthrough. It's a discovery. So we've got money, discovery, but what really changed Dolly Varden, and your viewers will know this group very, very well, the old Orin Resources, which is now Fury Gold Mines.
Yep.
We collectively struck a very smart M&A transaction where the 2 companies brought their assets together, bringing Dolly Varden size, scale, district opportunity. We tripled the resource. We consolidated 15 kilometers of prospective Hazelton Jurassics that are similar to Eskay Creek Premier and Bruce Jack. And, we have now positioned the company as a top 3 silver discovery name. And it's become one of the go-to silver Explorco developers. And we're now in the SIL, the SILJ, so the ETFs own us, and we've got enough liquidity and market cap where I really, like, my goal when I took this company over 3 years ago, Dolly was, it was a 20-cent stock. It was, a $16 million market cap. My goal was to make it a top 10 silver name. And I'm proud to say today, 3.5 years into that journey, we're the 33rd position in the SILJ. So, we've got another, we've got some more growth to do before, I complete that vision of getting into the top 10. But the way we're going to do it is continue to make discoveries, continue to grow the mineral inventory. We'll do that by drilling. We'll do that by M&A. But it's been a wonderful story, and we've got 40,000 meters of drilling to report. So there's lots of exciting potential catalysts to come here in the near term.
Okay, a lot there I want to pull on. So first of all, congrats on the ranking. You mentioned very quickly now the ETFs own us. I want you to share the significance of ETF ownership and what that means for a company like Dolly.
Well, look, one trend I've witnessed as I've come around financial markets and really studied them and made them, the most important, one of the most important aspects of my working life, is this trend and move to what I would call passive investing, or what is described as passive investing. And I just think, it's a really big trend, and the value where companies that are in ETFs trade at versus the ones that aren't is significant. There's a huge discrepancy and a huge gap and huge spectrum there. So the bottom line is, what happens is when the silver price does move up, investors go to buy the SIL or the SILJ, and the portfolio managers go to allocate that investment into a number of silver names. And so it's really, really, really important, because as it's less so important today, but as we get into that rising market and hundreds of millions and maybe potentially billions of dollars roll into the space, that money is the go-to stocks that are going to get owned are going to be your Heclas, your First Majestics, your Pan Americans, but also your Dolly Vardens. And it's powerful. Like, Jay, if you go back, I want to say it was December 16th, 2022. One of our largest volume days is when the ETF first came in and bought us.
Yeah,
and
no doubt.
In one day, I think our share price moved up 30%. So during, again, we're not in the mania bull market, right? But as we move towards that setup, that, we're on the doorstep of it, to be in that ETF, it's night and day, but if being there and not being there. And the great news is there's a lot of ETFs that don't own us. We're not in the GDXJ, right? There's other ETFs that, we will qualify for in the future. And so there's a lot more to come.
Yeah, I like that. It is a very important qualifier, especially for new capital coming to the sector, because trying to stock pick when you're just looking at the whole ocean of companies, you need some shortcuts, right? And ETF qualification is a really, really big one. You mentioned a couple of the, most respected silver mining companies, First Majestic, Hecla, which owns 10% of you guys, I believe. So walk me through your shareholder base. Anything of note that my audience should be aware of, Shawn?
Before I do that, I just want to say one thing. For silver investors, like when they go to buy some of these silver names, and if you really study them, some of them are only 30% silver. And so the other differentiator that we have is we've got these pure silver mines. We do have a large amount of another metal, which is gold. But, we're giving investors, we're 50% silver, 50% gold, whereas a lot of our peers are 66% lead, zinc, 1/3 silver. So if silver prices go to $50, but lead and zinc prices don't move, that company is not going to appreciate to the same extent. In terms of our shareholders, we've got a miner, we've got a very active, like if you study the silver space, a lot of companies have stumbled and fallen and had a lot of hardship. Whereas our large shareholder, Hecla, has been one of the best performing silver companies. They're America's largest primary silver producer. They're soon to be Canada's. They've been acquisitive. They bought Keno Hill, they bought ATAC. So, we've got a phenomenally supportive shareholder. And just to put it into context, I went out and I raised $40 million in 2022. 10 of the 40 came from Hecla. So their interest, they've been so supportive, not just with money, but their VPX, Kurt Allen, is part of our technical committee. We've got a 3-person technical committee that includes Michael Henriksen, that was with Newmont as their head structural geologist for 10 years. It includes Rob McLeod, who's a soon to be a mining Hall of Famer, superstar geologist, company seller, discovery maker. So we've got a great team. But you asked about shareholders. So you got Fury, is a 23% shareholder, and they've been very supportive. And I believe they're in this for the long run in terms of they want to see an acquisition, a sale in the future. And again, my thinking around that, Jay, is when I took over Dolly, we were trading at about 40 cents per silver ounce in the ground. Okay, 40 cents times 40 million ounces. It was a $16 million company. We've added 100 million ounces of silver. And now our ounce, so we're now, and we're valued at about closer to $1 an ounce today. So we're trading at $1 an ounce, and we've got 100 million more ounces. So you've got this $16 million company that's now a $150 million company. But and I learned this from Bob Maiardi, in bull markets, on average, silver ounces will trade at $4 an ounce in the ground. So we have the potential for a 400% appreciation as we move into that bull market phase. But that's past bull markets. What if this one's a little bit different in terms of, the amount of money that's out there and where silver prices could go? Number two, what if we continue to add ounces? So that's interesting. So we've got Fury, we've got Hecla. So that's a third of the company's in two shareholders' hands. And then you've got Eric Sprott, who's invested about $15 million and who's said to me, he said, Shawn, make me 20 times my money. Eric has a belief that silver is going to $300 an ounce. He's in this for the long run. He's been supportive. So again, you got 43% of the company in those three hands. Fidelity is a 7.5% shareholder. So with four shareholders, we're at 50%. And then there's another 40% that are held by other high caliber quality institutions. So you've got close to 10% in the hands of the public. And we've got some of the best retail shareholders in the business. They've just been awesome. And I just met a bunch of them down in Las Vegas at the Silver Symposium. I'll be seeing some more in New Orleans, but great shareholders. And I think that's what really separates us in terms of we've got that ability. It's a foundation for every company, right? It's important to have the asset and all the rest, but if you don't have the shareholders, your share price isn't going to react.
No, and it's an important question for retail investors to ask and to understand as well, because it's, again, back to how difficult it can be to qualify these companies. When I started investing in precious metals equities, Shawn, one thing I did was I set Google alerts for legend investors. I just wanted to know everything they were doing. And Eric Sprott was one of them. So every time there was a press release with his name on it, I wanted to know exactly where he was putting cash. And that's how I began my investor journey. It was I picked off 12 names, set Google alerts, and followed them everywhere, right? And that dictated a lot of my decisions because you're in good company, right? And it's a very important question for all retail investors to ask. I always ask it. Walk me through what's next. What every retail investor really wants to know is, okay, we understand the macro. We've learned about the business. Shawn, what's going to make the share price go up? So what can you talk to us about, 6 months news flow? What are we looking towards?
When I think of the stock market, I just think it's all about growth. Whatever sector you're in, whatever business you're doing, whatever stage, you want to talk mining, whether you're a producer, are you growing production, right? So our growth is going to come via mineral inventory, right? So how do we grow mineral inventory? We've got to continue to drill, continue to step out. And if you look at the couple of news releases that we've already had out this year, they've been big step outs, they've been big grades, they've been big widths, 10-meter veins at surface are now 30-meter veins at depth, and the grades are the same, or actually increasing. Our 300-gram grade is now 400 grams. So what's next is 40,000 meters of drilling to report. That's what's next. And so that's what's going to drive growth. But the one thing I want to say is, judge me on my track record, judge me on the last 3.5 years at Dolly Varden in that, look, I took over this company. We've seen silver prices range from a low of 12 to a high of 30. In that time, when silver pulled back, we went out, we made an acquisition. When silver went up, we filled our coffers with money. So just know that I don't know what between now and May looks like, or between now and next year, but what I will do is we'll thoughtfully take what the market gives us, And we are constantly looking regionally beyond our borders for opportunities because, there are other Dolly Vardens out there that we could bring our energy, our expertise, and advance. But I really think the next chapter, Jay, over the next few months is going to be all organic growth within our project with all this drilling. But I want to build a great silver company, and I don't necessarily want to mine it today because I don't think we're getting the value. And I don't, nor do I want to sell it today. I think the key is let's unlock the potential and the unanswered question I'm setting out to answer. Like when I got here, we had 40 million ounces. The question or the challenge was, could we get to 100?
Yeah.
Well, we've got 140 million ounces of silver equivalent today, 50% silver, 50% gold. So we've exceeded our original target. Now, the big ambitious question I have, and it's a question, is this a billion ounce camp? Now that we've brought in Homestake, now that we've consolidated the package, is there a billion ounces of silver on this property like there is outside of my property in the Golden Triangle, at SK, at Bruce Jack, at Premier? Are we the sub-basin of the Golden Triangle, and are we going to find it? Now, if we fail and we only get to 500 million, or we only get to 300 million, again, looking at what I've said about where these things will trade in bull markets, or even where they'll trade in a market like this, you've still got a very, very undervalued company here.
Okay. Shawn, look, I want to thank you for coming on the show today and sharing the story with me. It's been great getting to know you a little bit better and getting you in front of the audience. And I want to pick this up in a few months and get you back on and get an update from you.
Okay, awesome. Thanks for having me on.
Thank you for tuning in. I hope you enjoyed this conversation. Now, if you want to take the next step, I publish a weekly newsletter and it's free. There's a link to subscribe right beneath this video, and you can join me and 50,000 other investors weekly for this exclusive content where I share my key action items and takeaways from conversations just like this and plenty others. Thanks for stopping by.